Hello, welcome to this Familiarity update for the financial forecasting package developed by ESS BIZTOOLS. I'm Peter Towers, Managing Director of ESS BIZTOOLS. What we want to do in this Familiarity update is take you through the various components of the financial forecasting package of ESS BIZTOOLS. We're only picking on some of the subject matter today because there's about 32 separate product packages contained within the financial forecasting package. We will continue this series later in the year when we will comment on the remaining packages, and we will be presenting individual training packages for the individual components of this overall package, which we've called financial forecasting. And obviously this package also includes 12 months access to the Plan Guru budgeting and cash flow forecasting software, together with specialised training from the Plan Guru representative in Australia and New Zealand, Paul Barnaby, and some other benefits, which we will discuss with you in the next webinar. So let's start going through this and looking at what's included. The Chief Financial Officer Services is real accounting services, and we will briefly mention that later on when we go onto the website. Business planning. This is a crucial component of the whole offering real advisory services to your clients. It's either number one or number two on the order of how you should go about supplying services. I think the first one is that you fully observe, do a due diligence review on the client's business, so you understand where the strengths and weaknesses are, where the potential working capital problems are, where potential pilferage could occur. And then you can move into the business plan. But some people like doing it the other way around, and that's up to you. But business planning is crucial, and every business should have a business plan, and it should be reviewed each year. Crowdsource funding, equity raising. Do you know over $380 million has been raised, and one company is now listed on the stock exchange that started off as a crowdsource funding equity raising company? Australia's had this benefit for SMEs for 7 years. We were about 6 years behind the rest of the Western world when we started this. So we're still playing catch up. It's a great opportunity for clients with turnovers less than $25 million who are a company or convert their current business to become a company and have gross assets of a value of less than $25 million. So it's worthwhile looking at because they can raise up to $5 million. It's not easy, but what else is easy in this world? Early stage innovation companies is the running mate of crowdsource funding equity raising. It's for young companies who are undertaking innovative activities. Research and development. There's thousands of SMEs undertake research and development each year. And we're going to be running separate presentations on research and development because it's very important for a lot of your clients and my clients in my consulting business. Debtors management. Recently in the Financial Review, there was an article written by the CEO of MYOB. And he indicated that lack of fiscal management knowledge was a prime reason for the failure rate of small business operators once they get to 6 months age in their business. And he nominated debtors management, and I agree with him. Not enough people understand what an effective debtor system requires, and indeed the whole process of offering credit to customers. And we also have the debtor systems manual. A few years ago, one of our subscribers said to me one day, "Why don't you write a debtors manual, Peter, so that We can go through the original debtors management with them and then leave them with a manual, which gives the person that's responsible for debtors guidelines that he or she can be reading day by day. And I think it was a great idea, and that's what we've done. So that's part of your system. The Personal Property Securities Register. I didn't like this legislation when it was introduced. Thankfully, there was an inquiry into it. It recommended about 380 changes. Most of these have now been enacted, so it's a lot better legislation, but it can still be very dangerous if your client does not understand the consequences of not registering a customer on the Personal Property Securities Register. Strategic business mentoring. You know, every year in Australia, there's at least one area got critical business problems. Most of them caused by climatic conditions, bushfires, cyclones, floods, but others through the failure of a major business in an area that affects a lot of other small businesses. So we've analysed that and developed a survival in difficult times workbook that you can work through with your client to assist them to overcome these problems. Succession planning. It's not only for the owner or the CEO of a business, although that's where most attention is given, but it can also apply to rank and file team members by thinking of their succession in the organisation. And that might mean a bit of training, some skills development, some mentoring, so that they're equipped to be able to move up the ladder within the business to save the very high cost of finding some new people, bringing them in, hoping they're going to settle down. Some of them don't, they leave, and the process has to start all over again. The business evaluation workshop looks at a different angle on the survival in difficult times for SMEs. Business health checks. This is a mixture of KPIs and business metrics for particular businesses. We've got 5 of them at this stage, business types, which we have designed the system for, and we're looking to add another couple later this year. It works on the basis that you will complete the information weekly or monthly and then refer to it in performing your role as a virtual CFO to your clients. There's a whole range of other packages included within the financial forecasting package, and these are on the screen now. We have the charge out calculators to try to earn a targeted profit for tradies, for retailers and wholesalers and professional services firms. We also have one for manufacturing, which is similar to the tradies, just a little bit different. We've got predictive accounting reports, budgets, cash flows, key drivers, projected balance sheets for all types of businesses. We've got the firm trading material, the Business Plus newsletter, buying a business. Cash flow management notes, looking at the key components of cash flow management. How much time is money going to be tied up before your client receives any sort of return on it? Client mentoring and coaching, the client seminars, the ESS papers, you've got 580 papers, and then the Plan Guru budgeting software program that you can use with up to 10 clients at any one time. The normal subscription arrangements with Plan Guru for the same amount of monthly subscription is only 3 packages. We've negotiated a special deal with Plan Guru, and we want to see more Australian accountants and bookkeepers using it. The other package is selling a business. So there's a whole range, and there's a few more. Certified predictive accounting training, which is conducted by Paul Barnaby. And if you pass the exam, which is part of that process, you will be accredited with certified predictive accounting, which the syndication of ESS BizTools Plan Guru and Beyond Accounting Technologies, Paul Barnaby's business, has registered. Performing the CFO role. I've written that material based on my own experience. I was the Chief Financial Officer of a listed public company, and I was the company secretary as well. It was great training for a young accountant to go through that process in a company that had been on the stock exchange for 50 years at that time, and we changed a lot of the systems that were in operation. But what I learned is that the CFO is a very important member of the leadership team in a public company. So why is it any different in a smaller company? If the CEO of a public company needed to talk to me for an average of 2 hours a day, and that's what happened, some days 10 or 12 hours, don't you think your SME operators have got similar problems? And they haven't got a whole leadership team. In our company, there were 10 others in the leadership team, all experts in their own particular areas. Your average SME CEO hasn't got anywhere near that. He might have 2 or 3 people, key people in the leadership team working full time. So we summarize what I see as the performing the CFO role means and how you can implement it for your clients. And strategic planning annual event. This is a great suggestion that I got from Andrew Geddes, who was the joint founder of the Financial Management Research Centre, FMRC, at the University of New England 40 years ago. And Andrew has introduced to a number of accounting firms around Australia. 2 of the introduced firms are clients of ESS BizTools, the concept of a strategic planning annual retreat held in March, April, May of each year to plan what's going to happen in the next financial year. It's not a business planning. It's more of getting the leadership team together, analysing what lies ahead, what are the critical areas, how is the business going, how are we running it, and what's going to be the real goals for the leadership team to implement in the next 12 months. You can act as a facilitator for that program. It's interesting, it's exciting, and it is contributing to your clients' success in their business. So that's our summary of what's coming up, and I hope that you can bear with us as we just switch across and pick up the members homepage on our website, which you now have. So that you can see all of the material. So we're going to the financial forecasting package. And it includes everything that's within ESS BizTools. The first service I want to start with is the Chief Financial Officer Services. You go through it, you can read all the material. There's some videos prepared. You click on download the content. And then you have the material that's included within the Chief Financial Officer Services package. As I indicated before, at this stage, this is a review to show you what's in the system, point out where it is if you haven't had reason to find it previously, so that we can make sure that you're able to utilize this material. Just want to make sure that you're receiving this okay. So the next one I want to go to is business planning. Business planning is a very important subject. As I said at the beginning, I think it's number 1 or number 2 in what we should be looking at. Once the business plan's prepared, we can then produce the predictive the predictive financial reports, the budgets, cash flows, and projected balance sheets for the year. There's a lot of material within the business planning, which you can go through and look at. There's questionnaires, there's a range of material that you can use to make sure that you have everything covered within the system. The next one we want to go to is the crowdsource funding equity raising. This is a great product, and it's one that I think every accounting firm should be familiar with so that you can be able to advise your clients on the process. What I might do here is just show you a procedure control form, so you understand what its significance is. It guides you through this process. And on the actual form, you mark that you've completed these things. So the procedure control form is divided into various sections. Is your client potentially eligible to be a crowdsourced funding company? What's the role of the intermediary? A lot of people have got no idea what that means. That's the company with an Australian financial services license that's been appointed a crowdsourced funding intermediary by the Australian Security Investment Commission. There were 16 businesses, as far as I know, who were granted the license. The market is being dominated by 2 of the appointed intermediaries, Virtual, a Melbourne-based business, and Equitise, a Sydney-based business. They've got somewhere around 88 to 90% share of the market. There are a couple of other intermediaries who are active in the marketplace. I don't know about the others. I suspect they weren't getting enough work, so they've withdrawn themselves a bit. They've still got their licenses and they're still in the financial service industry. I think one of the challenges for accountants and new people in particular is to make sure we increase the deal flow so that all 16 of the appointed intermediaries are all very busy, because that will mean a lot of work for accountants and a lot of happy SMEs who are able to raise capital for their business. I think there's going to be a lot more acceptance of the concept of issuing shares. That's really how free enterprise started 400 or 500 years ago in England, where people were financed ship voyages of the New World and received shares in that ship or the profits that were emerged. Think about it with your clients. So there's the form which guides you through this process. We've got links to marketing material and links back to the various forms. So it will give you an idea of how to go about this. It's important that your client understands the rules and regulations that apply to crowdsourced funding. And in each case, you're going to need to have a business plan, predictive accounting reports, a vision, a feeling of knowing where they're going, and understanding of corporate governance. Because each of these companies I think, should be appointing one or two external directors. They need two directors in the first instance. It's one of the stipulations of the legislation, not just one director. So we will be having a far more detailed overview of crowdsourced funding at a later date. Early stage innovation company. Is the process. It was the stablemate for crowdsourced funding equity raising. And it's a process for young companies under 3 years of age mainly, although some up to 6 years can receive the support to be able to raise capital. And there's an incentive included to the investors. The investors receive 20% of their investment up to a maximum of $10,000 for a retail investor and up to $200,000 for a sophisticated investor, calculated at 20% of their investment. And if they hold those shares for longer than 12 months and less than 10 years, they don't pay capital gains tax when those shares are sold. That's a significant potential benefit that's been granted by the Australian government to investors to invest in these type of companies. I think you should know about this and have an awareness when you're talking to clients and prospects and other people that this opportunity exists. There is process to be done, there's work to be done, but it's an opportunity to be able to raise capital that could be very difficult otherwise. So it's something worth thinking about. Next one I want to move on to is research and development. This is a detailed package. Obviously, we're now talking in the financial forecasting package. This is down our top of the hill package. So we have covered everything from the original concept, the idea, through to the completion of the company's tax return with the all-important reference number from Oz Industry included. And why is it so important? It indicates that Oz Industry has reviewed the return that's been lodged, which has to be lodged within 10 months of the end of the financial year, so normally meaning 30th of April the following year. And it details all the work that's been undertaken during the previous 12 months on research and development activities. It obviously can be lodged a lot earlier, but that's the deadline date. Oz Industry pursue that document when it's lodged, and if they're satisfied that it appears that reasonable research and development activities have taken place, they issue a reference number, which when you're completing the company's income tax return, you then include that reference number in the appropriate box on the tax return, and the tax office is told that Oz Industries is aware of the research and development projects. And it's the trigger for the tax office to respond to a request for a cash refund of the amount of the research and development rebate if the company is trading at a loss. Of course, the company can elect to do that. So if they've got a loss of $120,000 and their research and development expenditure was $200,000 as part of that. So that would mean that based at the rebate is calculated at 43% of the research and development expenditure, that they had a research and development offset of $86,000 that can be paid out of the company's tax losses. It all helps the company put together their deals. Debtors management. I mentioned earlier that the CEO of MYOB, Paul Robson, had written an article in the Financial Review a few weeks ago, which highlighted the problem that many SMEs have in getting past what he considers to be one of the most dangerous milestones, and that is after 6 months in business. And he indicated a number of reasons for this, which was all summarized by his description that they lacked fiscal management skills. I believe it's up to accountants to honestly evaluate, most definitely, all new clients proposing to start or acquire a business on their fiscal management skills. And if they don't pass, you should indicate to them that you will perform the fiscal management role for them and you will be charging them accordingly and give them the budget estimate. Now, if they don't like that, I think you should suggest that they go to see someone else, because they are very much in line to become a small business failure, according to Mr. Robson's analysis. And we all know the huge failure rate going on in business. And one of the key components is people don't understand debtors management. This material will help you to educate your clients on debtors management. Whether they're prepared to have the discipline to be monitoring debtors on an ongoing basis is up to you to find out in talking to your clients. But if they're not going to have the time and the discipline to do that management, I think you should really be suggesting to them they go somewhere else, because they're going to cause you a lot of heartache down the track if they've got no idea what their debtors management is and what's required and what the debtors days outstanding is and what it means and what have they included in whatever budgets they've done for their business venture. They just assume that everyone's going to pay them on a 30-day basis. That's not right, is it? Australia was awarded a very dubious world title a few years ago that we had the longest debtors days outstanding in the world. And I suspect we still have, even though the then Prime Minister, Mr. Morrison, instructed government departments to improve their payments. But I understand that state government departments all around Australia are pretty hard to get money out of. So what do your clients do? How do they handle it? This system will take them through that so that they can get a better understanding of what's involved. So this is the debtors management. This is a whole series of forms and processes and procedures that we think you can implement to improve your debtors management for your clients. The next one we have is the debtors management system, which is the follow-on from the debtors system, of course. It's taking everything that we have talked about in the system and then putting it into a manual. So our suggestion to you is you indicate to your client you're going to undertake a review of the debtors and you're going to give them back a document. You can edit the document we've produced. It's been designed on that basis so that you're able to give to the owner, the managing director, the CEO, whatever the title is, and the all-important person that has the responsibility of being in charge of debtors. Bit of a thankless task in a lot of businesses, I think. So that person, normally a lady, has got some guidance, has got some notes to give her a bit more understanding of what goes on in the system, some explanation of what the personal property securities register is all about, for example. And hopefully then an understanding of the reason for the urgency of completing forms and getting customers to sign them. So it takes you through the whole process. It would be a great staff training for your own team so they fully appreciate what's involved. Because if in the past your firm has basically concentrated on preparing annual set of accounts and tax returns, debtors is just a figure, isn't it? It's an amount that's come out of the client system. What we're saying needs to be, if you're going to be this virtual CFO role, is to understand what's in those debtors figures. What is the debtors days outstanding? What problems are in them? Because it needs to be managed. And that's something that I believe from my own experience of having been the senior partner of an accounting firm, that in lots of ways, I think we just took what the debtors figure was and didn't explore how it was made up or how long it was overdue or anything. But if you're wearing a virtual CFO hat, well, that's definitely in your court. You've got to give it some concern, worry, see what can be done to improve that figure. So that's the debtors management system, which I should have brought down and showed you, but that's where it is. And you can go through. Obviously, there's a procedure control form again, which guides you through it. There's the welcome to new customer letter. There's an internal advice of a new customer to go to the team, the sales team, perhaps the marketing team. There's some debt recovery letters. There's processes about the Personal Property Securities Act and so on, which we will have a more detailed training session on later in the year. Now, the Personal Property Securities Register, it's been mentioned a couple of times. It was legislation that was obviously badly prepared because there was an inquiry ordered after it, and I think the figure was about 380 changes were suggested by the judge that undertook the inquiry. Most of those changes have been implemented, but it's still possible for businesses to get caught on this legislation. Number one, through ignorance of the legislation. It's part of your role, as I see it, to make sure, especially if you're going to take on a wider role of providing advisory services, to make sure your client understands how this legislation works and indicates that there are traps in there for businesses by leaving assets at someone else's premises. If something happens to the owner of those premises by a liquidator being appointed, products on the premises can be seized by the liquidator. So think about it. And again, it's a great staff training exercise to go through this material so that they can talk the talk to the client when they're out there working with them. The next one that I want to touch on is the strategic business mentoring. Now, if you've got any questions on any of these items that I'm talking to you about, you don't understand them, please send me an email, peter@ess.biztools.com.au, or pick up the phone and ring me, 0747241118. Now, the strategic business mentoring, I think when I gave the introduction, I described this the wrong way. This is looking at advanced services, whereby your firm, probably a partner or a senior manager, is supplying an executive type service to your client. It's definitely the chief financial officer's role, and it might even be a bit more. So we've tried to outline here some of the processes that I see are necessary. Assisting the company operations as if it was a public company is very important, because a lot of your clients may be wanting to scale up and grow, and they need to implement certain disciplines and processes into their activities. Just think about it for a moment. Under the Corporations Act, public companies have to finalise their reports to their shareholders by the end of October. The stock exchange has got even tougher requirements. I think it's the end of August they have to declare the results. Therefore, the accounting information has to be up to date all the time during the year. Now, your clients mightn't be quite that tough, but I think that's a process you should be aiming to achieve on any client that you're offering a virtual CFO service to. That at the latest, by the end of October, everything is finished to do with their results for the recent June 30 year. So they know where they're going. They can rule that off. They've got new budgets and cash flows, updated business plan. They know where they're going and they know what their tax liabilities are. That's part of what we're proposing you do in that situation. The next area I want to just remind you where it is and give you a bit of an overview is succession planning, number 25 in my list here. Succession planning is a huge subject. As I said in the basic introduction, it can cover the CEO or the managing director or a couple of the key leadership team members, but it also can go further and be looking virtually at every position in an organisation. What have you got to do to help that young 19-year-old have a succession plan in your business? Now, some people say to me, oh, they'll probably leave us. Well, they might, but some might not. Some might go away for a couple of years and then realise they were on a pretty good arrangement at your firm and want to come back. But it's part of how businesses should be developing. As they train and develop staff, some will leave, but other people will hear about the systems that this client has implemented and want to come and work for them. So succession planning is an important area. You've got a complete package there, which explores all sorts of components of succession planning so that you can sit down and develop a succession plan for your client. Now, a word of warning, every succession plan you write will not be successful. Unfortunately, in my career, I've had two that were not successful, primarily because the next generation that their father had been planning would automatically do certain things weren't on the same wavelength. They didn't see it that way at all. They wanted to pursue their own career. They weren't interested in going into the family business. So therefore, it highlights to me the necessity for conversations to be held fairly early with the founder and family head, with family members as to what he or she would like to see achieved. But please make sure your client takes into account the feelings of the child. And just remember, they're not a 10-year-old any longer, of course. They're going to be people possibly in their late 20s, 30s, and looking at their own career. Now, as part of succession planning, I have a personal belief that it's far better for them to have spent some time with another employer. It might be someone in the same industry or allied industries, so that they've had some grounding, some understanding, some familiarization with what goes on in other businesses, and perhaps some larger businesses that the founder might be aspiring to be recognizable with at some future date. So it'd be great if their children could go off and get some training. Now, I know of some cases that have been quite successful in doing that, others that were not so successful, but it's worth thinking about. Succession planning is not 1 + 1 + 1 = 3. There can be variances because of what people want to do with their lives. Therefore, the succession planning may well involve skipping a generation at some stages and waiting for the grandchildren to get old enough to run a business. And that can work sometimes. Just take some planning and thinking. And sometimes it will be someone within the business that takes over. Or it might be that the succession planning is getting the business ready for sale. And we explore all of those items in the material. The business evaluation workbook is a series of material that's helping you to look at the survival in difficult times workbook that I mentioned earlier and utilize it. So it has a series of questions, and then based on the answers, refers people to various articles that are contained within ESS BIZTOOLS that may give them a better overview of how to run their businesses. I hope that will help you, and please have a good look at it. The other, last item that I want to cover in this format at this stage is the business health checks. This came about through working with a firm of accountants and going through their clients and doing an analysis of what industries they were in and what activities they were undertaking and how they were comparing business metrics and key performance indicators. So one of the industries that they were concerned about was the commercial building industry. So we developed a business health check. And there's one for retailers and one for pharmacies and a couple of others. I suggest that you go through and look at this and work out how you can implement that for some of your clients. We will be developing 2 more of these health checks during this year, which will be automatically uploaded to our website as they're completed. So if your subscription is still current, you'll get access to those materials to utilize in your dealings with your clients. So that's our overview of the financial forecasting package. I hope that that will give you a good insight into what is contained within the system, so that you will be able to utilize that to assist your clients. So thank you very much for being with us in this overview of the financial forecasting package. If you want to have any discussions with me, as I said before, please send me an email, peter@essbiztools.com.au. Stay safe. Have a great day. Goodbye. I look forward to hearing from you. Goodbye.